Good morning, traders. I hope you guys are ready for another pre-market prep. We got another great show for you today. Let's get into today's topic. We'll talk about the FOMC minutes, what was said. Is there anything important to point to? We'll go ahead and touch that. We'll touch, of course, what you should pay attention to today, what kind of data is going on, who's speaking, and what's coming forward for the rest of the week. We'll talk about is buy the dip back. GME with a 4-for-1 stock split. We'll also get into, of course, triple BBY insider buys out there. Dennis has some comments on that. We'll talk drug maker Merck and talking with SGEN here. We'll talk about that deal that's out there. And of course, we'll take a look at what earnings are after the bell. There's one that's on my radar. You guys smash the thumbs on up. Today we got, of course, our special guest, Marc Chaikin. Let's get it started. Welcome to Pre-Market Prep. And like always, smash that like. Let's go.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders. I'm going to give Joel a second here. I'm thinking he's getting his camera ready, but I'll bring on Dennis a little bit here. How we doing? Good morning. Let's get into it. Before we normally we do the futures. I think Joel's fixing his camera, so I'm going to give him one more second. If not, he'll probably let me know. Forget the camera. But let's talk a little bit about what Dennis wants to get into today. Let's talk about buy the dip. Is it back? And what are you seeing out there, Dennis?
Oh, you want to start right with buy the dip?
Yeah,
I mean, it's been right back.
Let's do it.
We've been talking about buy the dip here for a better part of a week and a half here now. It is back. 100% it's back. It was an opportunity again yesterday to buy the dip. I mean, the sentiment has turned. The Fed minutes we can get into, which said 50 to 75. So, I mean, there's reasons to be bullish here. The one problem is the only thing that matters is next week's CPI data. So we can have, a rally, maybe we rally ahead of it, but the only thing that's going to matter is that we see inflation data that's showing the plan is working, the Fed's plan, that inflation is starting to cool. If for whatever reason we get a hot number, the rally will be gone in minutes. But I think there's the possibility that the number might not be that hot. Maybe you get a little bit of cooling. Just show me some cooling. Show me that the Fed's plan is working. We know the commodity prices have come down. We know there's a lot of reasons. We don't know if it's going to be in next month in this data that we're going to get next week, but we can see it around us that the prices are starting to cool. I talked about the housing market. Prices in Ontario fallen $55,000 in the last month. I mean, there is places you can see prices starting to inflation starting to slow down. The question is, it's going to show up in next week's data.
Something we're all going to be watching for is that CPI data. What will show up? Will it show inflation peaking, or will it take another month? But let's go ahead. Let's bring it back. Wind it back. Let's get into the futures. Let's take a look here. Joel, if you could share your charts whenever you're ready, and we'll cover the futures action overnight.
They're all up. Gold, crude, silver, Bitcoin, and Ethereum. They're all up.
There you go. Well, quick wrap there. Let's get into it. Let's talk in here. Federal Reserve, the minutes came out. Of course, there wasn't anything really unexpected given. Said that another interest rate increase of 50 to 75 basis point is likely in the July meeting. The only thing kind of different that I saw was also noting reports of consumer sales slowing and business holding back on investments due to rising cost. But that's the only thing I saw in the minutes that kind of stood out to me. Do want to talk about what we've got to watch for today. We do got an EIA crude oil inventory report. We also got Federal Governor Christopher Waller is going to be speaking. We also got St. Louis Fed President James Bullard is scheduled to speak at 1 p.m. Eastern today. So keep that on your radar. I talked about it on my Twitter. the market might get bullard today. So we'll see what happens there. And then, of course, U.S. employment report on Friday is definitely to watch. That'll be tomorrow. We'll keep watch on that. Let's go to the GME 4-for-1 stock split.
I'd rather
here.
stick with market talk for a minute.
You want to talk?
We haven't really even got a
dip a little
chance
more?
to get into it here, Mitch, before we go to GME, because that's going to be a 1-minute segment, because we can't talk anything negative about GME ever, or I'll get 1,000 messages at me. So I almost prefer just not to talk GME, but GME, yes. So I'll just say quickly, you mentioned GME trading up on a 4-for-1 stock split. Stock does whatever it wants to do. We know it's controlled by retail, so it's its own thing. That's cool. Not going to say bullish or bearish on it. If I say bullish, everybody go rah rah. If I say bearish, I'll have 100 people emailing me or tweeting
Don't
at
worry,
me
I'll say it
saying
for you,
how
Dennis.
bad I am. So I'm not going to say anything about GME. Can't talk that stock. So, but let's move back to the overall market. I mean, it's very interesting here. I mean, we have such an interesting setup. We've had a nice little run, and that's all it is so far. It's a nice little bear market rally. And we've seen these before. The biggest question is this time different? And the answer to that is unknown until Wednesday. So we could see some chop ahead of it. But I think, again, like I said, I don't want to be all cash, because if that number is not that hot next week, if we get a little bit of cooling, just show me some cooling, show me that the Fed's plan is starting to work, then you could have then you could see, this rip your face off, short squeeze continue here. Because right now, so far, it's just a short squeeze. But all rallies, and people don't realize this, all rallies in bear markets start with short squeezes. The question is, get the buyers to come in.
We got earnings season coming up too.
And that too, Joel. And that is so important as well. And they're not going to be great. They're not going to be great.
I think tomorrow's jobs number is so important, right? Because I think everyone has eyes on that word recession, right? And everyone's trying to point to the negative GDP that it's pointing to. But of course, what needs to happen if we are really going to go into that recession is seeing that increase, of course, in unemployment. So I think tomorrow's number is really massive. At least it could even help get that rally even higher, right? At least I'm definitely going to be watching it.
There's no doubt tomorrow's number matters as well. There's no doubt about that too. The big number still, again, is going to be next week. I'm going to say it again. But I think you're going to see chop. I don't think it's a straight up market. I don't think it's a straight down market. We're going to continue to see chop. And that's okay. How do we trade the chop? We talk about it all the time. Buy the dip, sell the rip. Sometimes you're shorting the rips, buying the dips and the downtrends. We're kind of just in this choppy market. So you can buy, sell, short, buy. You can do it any way you want to do it. But basically not chasing. That's always been the key to 2022. It continues to be the key. We've had multiple times, where we've had great opportunities. It keeps giving you dips here. This has not been a straight up market at all. Even intraday, I mean, S&P action yesterday.
All over the place.
All over the place. We're up at 385.77 SPY with 20 minutes to go. And then we lose 30 handles on the S&P in the last 20 minutes.
That 20, it was 50. It was actually less than that. It was 15. And I'm like, okay, I guess we're not going to close on the highs. I mean, that was a
crazy
33.
move.
Yeah. I actually went to buy something and I got it 2 handles lower than I wanted it because it was falling so fast. But
wow.
You know what? The other thing too is Powell. You know what? He's been hawkish. Half, 3/4, and everything. Just one little dovish, and it goes along with
hint of
dovishness. Yeah. Because he was, transitory, and then he's vocaler. He's all over the map, and that, if he just like one little thing, and I mentioned this yesterday. I mean, the TLT. I mean, yeah, I had a bad day yesterday, but man, that's telling you maybe maybe get a little rally in that. I mean, it's really come down since the end of the first year. But even if that's like steady, but just one hint of dovishness, and this market is just going to explode.
That's what it is. We just, and we'll get that hint of dovishness, and that's why, again, it's the CPI data that matters, because they'll go full. If we get another hot number, they go full hawkish.
That's the concern there.
That's what matters.
Yeah, I think that's definitely a concern of traders out there making the choice is now the time. Is now the time to really start dipping.
I have been, and I'm like I said, I think I'm down to like 39 or 40% cash in the long-term account. I have been. We know at the peak I was up to 53 or 54% cash in my long-term account. It's not keep talking, but and it fluctuates. I'm never going to be all cash. I'm never going to be all stocks. But there's that happy. Where do you go from there? Now, again, the trading account, I'm leaning long all the time. I'm just leaning long right now because this has been working. I normally trade market neutral, but I'm leaning a little bit long every night because it's been somewhat working here. Obviously, Europe is still the wild card. There's still a lot of things to worry about. So we can't just come in and say, that everything is rosy and we're starting to look good again. There's lots of concerns. We go back to the Europe situation. You look at Deutsche Bank, made new lows again yesterday. There's some problems. And to your point on earnings season coming, these earnings are not going to be great, Joel. What we need to see is there's going to be some lower guides, and there may be more than normal. What we need to see is that the market takes it in stride and they buy the dips on the lower guides like they did with Micron, because Micron has turned. They lowered guidance significantly. Everybody's like, oh, here we go. The capitulatory selling on the first, which you can see when they knocked the stock down to 51.40, and boom, we're up 15% from there in 3 days. So that's what we need to see happen, because these earnings are not going to be great. It's not going to be like, wow, what earnings? It's just not happening. And the Fed needed that to happen. So the Fed's plan was to knock, the consumer back a little bit here, knock the spending back, get the prices in check, and then eventually they can start to lower rates once inflation's in check. But that process has not been easy so far.
We can touch the continued destruction in oil. I have to say, Dennis, you've been pretty on point on that turnaround there. Do you see continued action, or do you think it's kind of gotten to the point where it's also getting to the point now it's like oversold on the downside?
Well, yeah, that's just it. A lot of bad news, and that's why, I've turned somewhat bullish. I'd say, it's temporary bullishness for the simple reason until, obviously I'll be pure market neutral probably going into Wednesday, because who knows at that point. But I think there's a lot of bad news priced in. You can clearly see, I hung my head out saying the ARKK 2022 low is in. Like, this is, maybe I'm wrong, but everything so far is showing so far, so good. So I think there's just a lot of bad news priced. Zoom taken off, and obviously yesterday pulls back because nothing's going to go straight up in this market. This is not easy peasy market. There's going to be dips to be bought. But those dips, keep coming and giving you chances. And it seems like there's buyers behind on every dip. So the good news is buy the dip is back. Buy the rip is not back. In 2020, we had buy the dip and buy the rip. They were just buying no matter what. And that's how we exploded up to, S&P 26, 27 times earnings, which is absurd. So we're coming back down to reasonableness now, trading 17, 18 times. But if the earnings start to come down, again, like I said, that PE can go up. So we have some concerns, but we also have a lot of bad news priced in. So weighing that, where does that bring you to your market opinion? It puts me a little more on the bullish side right now, but I'm still cautiously bullish, waiting for next week's CPI.
For oil, just real quick on oil here, and I'll pull up the chart. We're going to forget that negative 30 value because, that was just an anomaly. But you look at, 10, and that was artificially low, right? The pandemic, okay. Well, 120 is artificially high, right? So I think you got a date with just with the, the slow, the high price, people are just not going to be spending as much money. It's a slow transformation to EV, but I think you see oil. I think an equilibrium might be like 75, 80 bucks, come down there because, 10 was an extreme. Right. Yeah. 120 was an extreme. Why not come down to, 75, 80 bucks? And also, right now that they're greasing those pumps, man. They are just pumping all the oil that they can get out there at these prices. And that they're hedging. They just got to be selling the daylights out of the futures and all the related products. As far as the stocks man, now you got a whole different market structure here. You went from 85 to 105 in a couple weeks. And then you came down, people, I'm buying the dip at 100. I'm buying at 95. I'm buying at 90. I'm buying at 85. Now you got sellers. You're going to have sellers all over the place lining up on this time.
On the rallies.
On the rallies, yeah. It's just a different market structure now. People are just stuck. Oh, I shouldn't. Why did I buy that in triple digits? ExxonMobil's gonna, it's just it's gonna be a lot of buyer's remorse. Probably these stocks are gonna end up looking like the growth stocks,
It,
eventually.
it was crowded. We talked about that. I mean, Nucor was your tip off when Nucor
Oh
went from
yeah.
$187 2 months ago, literally April 27, May 27, June 27, 2.5 months ago, making new all-time highs. This stock's almost been cut in half. This is the best steel company in the world. I mean, that's, one tell. And it was way ahead of oil. And it kept going. And I kept saying, eventually it's going to come for the oil stocks. I was a month early. I kept saying it in May. They're coming for them. They're coming for them. They're coming for them. I said it in the utilities too. I said they're going to start to hit that stuff too. Eventually they did. It just took a lot longer than I thought. And that's with me, is that I've got the tells, I'm feeling it.
Too early.
A lot of times I'm early. So a lot of times my timing is early. So, but it did come for it.
The only thing I would kind of watch for is was this more kind of also kind of seasonality coming into play a little bit. I'm going to keep watch because I have a feeling in winter we might see another rally, but we'll see what happens. Let's go ahead. Let's get into our guest today. Let's bring on none other than Marc Chaikin, founder of Chaikin Analytics. How we doing, Marc?
We're doing great. It's my birthday tomorrow, so I'm
happy birthday,
happy early birthday. I'm sure the chat will wish you the same.
So Marc, how are you approaching this market? Obviously, it's been a little bit of a chop fest. I mean, we got CPI data last week. Bullard's talking this afternoon. Earnings season is coming. There's a lot of balls to juggle here. How are you approaching? We had a nice little rally here in the last week or two in some stocks, but then other stocks, kind of like a value to growth rotation thing going on. Some of the value stocks have continued to be hit. The growth stocks have slightly started to pick it up here. How are you approaching these markets?
Cautiously. I think we have trouble getting above 4,000 on the S&P. And my view has been for a long time that there'll be a great buying opportunity here in 2022, but it's based on history, it's more likely to come in September, October. So what we had last week, or this week on Tuesday, was a mini W test of the previous low and a big reversal. So that's gotten everybody interested in the buy the dip again, as you guys were just discussing. But the simplest way to play this market is with the defensive stocks. That's never been my bag because it's like being, well, you can't use words like half pregnant anymore, politically incorrect. But it's sort of like neither hot nor cold. What I am finding interesting, though, are selective stocks. And I think this is now going to become a stock picker's market. They've clearly unwound the, short ARC stocks and long energy. I mean, that's been where all the money's been going in terms of hot money over the last 3 months. But I'm looking at stocks like Alibaba, CRISPR, which is the only Cathie Wood stock that has a bullish Chaikin Power Gauge rating. And they're starting to look really interesting to me. I'm seeing price targets raised by brokerages on Alibaba. Yesterday, someone raised their target by $10. And CRISPR's chart is very constructive. And long term, I believe in the technology that they're developing in terms of curing diseases and vaccines and so forth. So I think it's a stock picker's market, but I'm a seller up at 4,000, not a buyer.
All right, I want to jump in here. I know that before you used to like Unity, so I know the chat's asking about it here. What do you think about it now, Marc?
Well, it's a broken wing, fallen angel type stock. It's forming a great base, but until the market gets some speculative fever, it's just not going to be the kind of stock it was. But that's a really nice base there. And if you can buy the dip, this stock may have a future. I mean, clearly they got the technology to do not just a metaverse or whatever they call that, 3. But they do have the technology to enable virtual tours of factories and cars and so forth. So interesting. But one stock that I've liked, Doximity, which is the only telehealth, it's not really telehealth, but the only sort of digital medicine company that is making money, and that's got a really good chart. So I think where this all leads me is it's a stock pickers market now, and you know,
Okay.
I'm obviously in pain on energy because I think the long-term picture for energy, particularly natural gas, is really bullish. But you had that fire explosion at the Freeport refinery, and that just took the starch out of EQT and the more speculative natural gas stocks. So I think long term I'd stay with these. Buying this current weakness takes a little bit of a leap of faith, but I believe, as Mitch just said, come winter, Europe is still in a really bad place in terms of natural gas.
Perfect. So you would say leaning more to natural gas than oil there. Is that what you'd say?
Well, the oil stocks have come down so much that I think some of them are cheap here. It's interesting because Goldman Sachs, as you pointed out, came out with that $65 crude prediction, but then they raised their price targets on things like PSX. So, and FANG, that really doesn't make any sense. It seems like there are two camps at Goldman. There's the commodities camp, and then there's the stock analyst camp. But I do favor EQT, and there's a couple of other better balance sheet stocks in the natural gas space that I do like long term. I think there'll be another run in natural gas.
I mean, if you wanted to get into the commodity trade, I mean, it's given you an opportunity here now because we've come up substantially here. So if you're underweight commodities, there is an opportunity here if you think, you know, that we're going to go right back into the situation that we had a couple months ago for a retracement, maybe of some of these moves. I mean, some of these stocks have come down substantially.
Well, remember that big spike up in oil to the peak at 120 really was part of a recession denial mentality. Now everybody's embracing recession.
Yes.
Oh, it's, you know, so that's really affected the commodities in a big way. What we don't know, and you touched on PE ratios earlier, is a 25% derating, you know, shrinkage in PE enough based on what we're going to start seeing in terms of earnings. So, you know, that's the big unknown. That's the other shoe that's going to drop. And it's not just the Micron syndrome. It's the reality of, do we get stagflation? Do we get really serious hit to corporate earnings, and that justifies a 14 multiple instead of a 16.8 multiple? And there's no way to know that. That's really a market mood kind of thing, and guidance will give us a tip off.
Definitely. Well, you guys heard it here from Marc Chaikin. It looks like it's starting to be that stock pickers type of market. We'll definitely be watching to see which one of these starts getting picked up. Thank you for joining us today, Marc Chaikin, the founder of Chaikin Analytics. Definitely check that on out, guys. You guys can check it on out right on his website. I'll make sure to include it in the description below.
And by the way, CPI on Wednesday, the 13th. So that's a big number, and PPI suggests that it's going to be a big number. So we'll see whether that's already built into the market.
All right, we'll see what happens there. Thank you, Marc, for joining us today. All right, let's go ahead. Let's keep it going with the topics. One topic that we wanted to get into next is BBBY getting insider buys. I want to show you guys that and also kind of give you some background there. I know Dennis has been looking at recently. There's more insider buys on out there. Here you guys see here what happened here was Sue Gove, interim CEO, bought here 50K at $4.61. I'm sure that had to do with kind of a nice little purchase there. Also by the director, Harriet Elderman. Here was 10K and 10K, all at 461. Then these were at 494 and 490s. Looks like there's definitely been more insider buys lately. What have you seen out there, Dennis?
Yeah, just this is a good example, you know, of that insider buys can move stocks. I mean, especially when they're beaten down. You know, stocks are looking for a vote of confidence. This stock has been straight down. it feels like forever. I mean, back in March, $28, talking about a $4 stock now. You know, the New York Post article, there's, you know, turn off the air conditioning to save power. I don't know how much truth is to that. But I mean, this company has problems. The company has serious problems. I don't know if it's a zero or not. There's a very possibility it might be. But what I can say is nothing goes straight to zero. When you see insider buys coming in, you know, that you haven't seen, you know, and there's been a couple insider buys in Bed Bath & Beyond along the way, but you get 3, you get the interim CEO, you know, coming in, showing a vote of confidence here. And that's what it is. They're coming in here, you know, just trying to give it a vote of confidence. It wasn't a huge purchase. So you know, but you can see little squeezes in that. Now, again, when stocks become marginal at $5, I mean, it's always a bogey. So I think this thing will probably struggle at $5 here again. Hard to just say this is the turnaround story specifically, but what I just wanted to comment in general is that I'm seeing more insider buys across the board. And maybe it's selective perception on my part, but I do watch the insider trading action. We saw lots of insiders selling last year. You could just not stop. It was just insider sells everywhere. And there's always insider selling. But I'm seeing more insider buys now, which makes me more confident that, you know, there is some, you know, CEOs that are saying, hey, my stock is too cheap here now. And I'm willing to, you know, maybe not in the case of Bed Bath & Beyond, because the CEO is just trying to get
right. There's a difference.
It's a different type of a buy.
Yeah.
And it's pretty small, but there is, you know, that, you know, seems like insider buys coming in across the board more than normal, which makes me think that, hey, a lot of CEOs think their stocks are too cheap.
Is this guy bought before? You know,
like I think he's the new CEO, right?
Oh, he just came in.
Yeah.
Okay.
This is the early vote of confidence.
Yeah,
and this happens.
It's
going to lift the stock a little bit here this morning. You know, just like, you know, the GameStop does a split, it's going to lift the stock. Is this sustainable? I mean, that's the big question. But I had Bed Bath & Beyond in my portfolio for a little bit there because I was banking on, obviously, see, you know, the Chewy CEO, if he could do anything with it. But, you know, that's never materialized into anything. So I sold it and took the loss. Obviously, you know, and obviously I should have never been in it because fundamentally there was no reason to be in Bed Bath & Beyond. But the stock has just murdered everyone. I mean, this is a path that looks like it's just death by 1,000 cuts, and eventually it's just going to get you in. There was never a real bad day. It was just that. And that was a lot of these stocks, just the death by 1,000 cuts where it goes down, you know, 3% every day. And then you're looking, it's like, when did Bed Bath & Beyond get down to $4? Last time you look in April, it was 20. So just crazy moves.
You know, bunch of lows at the 450, 460 area. And, you know, so if you want to pick it up on the cheap, and then your pre-market high is just over 490. I mean, your 3-day high is 502. So 460 to 5. Stores are too big. They got to close stores. I don't know what their online presence is. They need smaller stores. They need cheaper leases. I mean, there's some companies that, you know, like the insider buy, you know, maybe means a little bit something to you. Yeah. This means and then that Ryan Cohn I mentioned on the, you know, his tweet. I almost responded, but I don't respond anymore. You know, he was
what
like,
was his tweet?
His tweet was like, you know, CEOs that leave the company, you know, should like give the money back that they made, you know, all the money that they made, they leave the company in shambles. And I'm like, yeah, what about the insider, you know, the activists that pump the stock, they get people in at 30, 35, and 40, and then the stock goes to $5. I want to, you know, why don't you reimburse all those shareholders? I mean, you know, this activist crap. I mean, come on. That guy should just take his money and run. And like the GME 4-for-1 stock split, I'm not going to make any comments on that.
Yeah, I mean, Ryan Cohen has influence, and, you know, he tweets something out, and, you know, remember in 2020, he tweets an ice cream cone, wasn't it, like, and everybody's buying stocks. I mean, the meme, you know, stuff. It's tough, though. I mean, it's still a matter of, like, some of these companies are not very good companies, and they're not all going to be huge turnaround stories. I know it worked out great for GME, but, you know, even there's an argument
if you sold.
there. Well, I mean, it's still up there, Joel. I cannot believe the stock is still $117.
Yeah.
I'm just flabbergasted.
What I would say is, why not just let the market split the stock, right? At least that's what I would think would happen here. Up there at 123, it's already lost about 100. Who's not to say that it doesn't get down there at 50? But that's just the way that I see it here. A lot of stocks have been talking about stock splits. I mean, Tesla also on the big retrace also been talking about a stock split. So it's kind of tough to kind of see stock splits here, but we've been seeing so many of them. What's not to see these continue?
We got Franz in the chat saying the huge short interest here in Bed Bath & Beyond. I'm going to say it again. If you're buying stocks and putting them in your long-term accounts because they have a high short interest, you're probably going to be left with a lot of bad companies, because there's a reason that the short interest is high on a lot of these stocks, and it's because the companies are struggling. And I mean, anybody who is buying Bed Bath & Beyond because it has a high short interest, and banking that there's going to be this big short squeeze, has been murdered. The stock is making what? How many year low is this right now? $4. I guess 2020 we got down to $4. They're re-challenging there, but it's tough. It's a tough game to just buy any stock. That was a fun game in 2020, maybe even a little bit in 2021.
2021,
That is not working in 2022. Fundamentals are starting to take over. It still worked in GME, held up well. AMC held up fairly well. I mean, if you can say from 70 to 12 has held up well, but I mean, it's not back to 5. GameStop's not back to, $5 either, but it's tough. I'm just going to, that's my tip to newer investors. Don't worry so much about short interest. It's something, that is it's good to know it. But if your whole investment thesis is built around short interest, I think you're going to have a hard time making money in the long run in this market.
Yeah, it's very difficult to tell when the short squeezes are coming, and you could ride them down the wave very far before you get that squeeze, or it could never come and it could just be a slow leak out. So definitely dangerous to play that game.
Big time.
All right, let's go to Merck here. Let's go to some bigger news here. Let's go to Merck. All right, we'll talk about it here. Drug maker Merck is in talk with SGEN in a deal that could be worth. They're in talk to at least there's a money on the end of this now, roughly 40 billion or more. Wall Street Journal reporting on Wednesday the company is discussing a price above $200 a share for SGEN. The report citing from people familiar with the matter. So what do you guys think here?
I mean, this stock has been supposedly going to be bought by Merck for a month or two, or even longer than that. I just make the deal official so we can stop talking about it here. The stock has been hanging out there 175 to 180 for a reason. They know Merck is still going to eventually probably buy this company. Now it looks like it's getting closer anyways, but still not official. So Merck trading down on it just slightly here. SGEN obviously getting the lift here. I don't know. You got to crunch the numbers and see where the 40 bill takes the price to.
Yeah,
but it looks like, remember, time value of money. Remember, we never had to do that 2 years ago. Worry about time value of money in an interest rate environment where they're offering you 3.5%, 4% on risk-free money. That's all of a sudden, you got to consider that.
Part of the equation.
It's part of the equation now. If you go back to your CFA calculators, and that was a big part. The risk-free rate, throwing it in there to calculate it out. While the risk-free rate is next to zero, it's not zero anymore. So you've got to consider all those factors, but I don't know what to say. I mean,
Straight's laughing at that $200 price tag right now.
It might be $200, but then you got 182. So let's say it's $200. I mean, you still have time value of money. This thing takes a year to close. Well, there's only $18 upside. That's 10%. Well, you get 5% risk free. What if the deal doesn't go through? I mean, even if you get a $200 price tag, it ain't going to $200 tomorrow.
No. It got a big pop and it's already leaking. Some people, the 4Mers, took it up to 187. So I'd use that, as a short-term target. I mean, it's very hard to trade a stock that's in play, but 187. And what's this high here? Boom, 192.79. But if $200 on the table, then you're looking at $17, $17.50 of free money. If all of a sudden you hear a headline that Merck walks away, look out below. I mean, simple as that. I don't think anyone else is coming in. Merck has held up very well. Back to where I sold this thing back in it must have been in the 90s. It got up. I think in the 90s. Remember that, Dennis?
Yeah.
I don't even have the chart. I had it.
Everybody thinks this has just been an unbelievable mover, but if you go back, I believe the all-time high back in the year 2000 and Merck is
it's not even on these charts. Yeah.
20 years. and basically it's just back to even. And that's because in 1990 and 2000 they were paying 30, 40 times earnings for a healthcare stock. Now they pay 8 times for that. So the company has grown. The multiple contraction obviously happened, and it never obviously re-expanded into the craziness because it's a pharmaceutical stock. So I don't know what the hell people were paying 35, 40 times earnings. But in 2000, the bubble of all bubbles, and yeah, it was more of a bubble in 2000 than it was in 2021, at least for the majority of stocks. It's finally gotten back there. I'm long Merck in the long-term account. We know I bought it about a decade ago, about $30. I think I paid $33. I sold actually a little piece of it. Just it's run a long ways, and I don't know. If I wouldn't want to be investing in Merck up here at this point in time. It's run a long ways. The reason I hold the majority of the position is because I don't want to pay the tax. And that hasn't worked out so well in some of my stocks. I should have paid the tax. I should have paid the tax.
I know. And whatever. We won't go in that.
Again, there's ways to push the tax bill too. Remember, you could do the calls and the puts. You could put
you did that with what?
Yeah,
MasterCard?
I did that with MasterCard to push the next tax year because I was nervous about it. Locked in my $350 price. Sold the calls, bought the puts, and with $350 strike for the January. So you can lock it in. You can push the sale price farther down, if you don't want to lock the tax in this year. There's different, ways to do that. But again, you still got to pay the tax. You're paying it today or you're paying it tomorrow, you're paying the tax.
Exactly. So, that's what I was wondering there. If you guys in this recent downturn have learned a little bit more lessons in there, or you've taken anything out of this downturn, should you be maybe selling at the top there, or what you think is the top, or do you just hang on to your shoes and kind of go through the downturns? What do you think, Joel? I know that you hold often, and you've gone through many waves in the market.
I'll let Dane.
He doesn't sell anything.
I'll let Dane and Emily figure out the tax bill. I'm not going to do that.
Joel doesn't sell anything. He just holds forever.
Well,
some of them work out. Some of them like VSCO, not so much.
Yeah, I mean that's not a factor. I just don't I pay enough in taxes, right? I mean, except for at the end of the year, if there's some losers in there, play it that way. And
I sell everything at the end of the year, and unless it's in a registered account, which the taxes aren't deductible anyways. I clean up my portfolio, the long-term account every year in December, before the end of the year.
That's it.
Realize whatever, crappy stock you had in there, get rid of it, minimize your tax bill as much as you can. And then you start with a fresh slate.
Exactly.
You start with all, winners. Again, in the registered account is different trading when the whole thing's taxed, when you turn 65 or 70 or whatever it is. I mean, it's just a different, animal. But outside any registered money, and we call it registered in Ontario. I know you guys got your IRA and it's different setup there, but same thing. You're outside if you're just playing your own outside money that isn't in any retirement plan. I clean it up every year.
All right, let's go to the next topic here. I wanted to talk about Winnie Wu here, strategist from Bank of America, stepping up, saying that investors should take short-term corrections in Chinese markets as buying opportunities. Looking at the bigger picture, the worst is in terms of corporate earnings, the disruption, COVID cases, and those should be behind us in the second quarter already. This is Winnie Wu, strategist from Bank of America, and this was told to CNBC. What do you guys think here? What do you guys think? No here.
Alibaba?
What is all Chinese markets buying opportunity given by Winnie Wu, strategist.
We've said that JP Morgan bottom ticked it, with that call.
They
It
did.
was all uninvestable.
Yep.
And that was the bottom of Alibaba, was the bottom of everything, the capitulation. We've had capitulatory selling. Everybody's, we got to see capitulation. You've seen capitulation in different pockets all year. Capitulation happened in March in Alibaba when it went from $100, it's $100 stock. It went down to $73 in 4 days. That's capitulation, folks. And that was the JP Morgan bottom. Obviously, when they said, this is uninvestable, they said it right at the bottom. That came out with that note. And then the stock ripped higher. I mean, I think we've already seen the capitulatory selling in the Chinese names. So, can you buy them on pullbacks? There's always obviously political concerns. We've talked this stuff again and again and again. But, if you're so inclined, there's been a huge underperformance in emerging markets, and especially in China. So could there be, could this lead us out of here? It's possible. I think the BABA chart is constructive here. I think it looks actually pretty good. I think it's gearing up if you get above 125 to be in breakout mode here.
There you go.
So I don't mind. I'd say above 125, there's a trade in here. I don't know long term if I want to invest in China. I've been
One
burned in it
headline,
before.
yeah.
But above 125 from a technical base, you can trade anything technically. It starts to look like a breakout.
It's strong this morning. It's up $1.16, and I mean you have this one high, that one crazy high, 124.11. That was just a big move in 5-6 days. So there's your ultimate target. But this 120's been pesky here. So, if you're buying this off the hop, you don't want to see this thing at like 119.5. Yeah, a seller at 120.10's a high. You've stuck over it a couple times. So let's make 120 support. And I'll get super bullish here if it can come up and take out 125 and then make a bunch of lows in this area, hold 120, then I'd look for another leg higher. If not, maybe get a chance to buy it on the cheap or cheaper than this.
Okay, Levi has earnings after the bell today. Let's take a quick look at that chart.
Boom, boom. Not much. Kind of hanging out near the low of the move. You got a double bottom.
Expectations are in the gutter.
Yeah, expectations are in the gutter. I mean, I wouldn't be shorted into the report. I'd keep an eye. Like it has a 1650. That's a big area. Last 4 or 5 days, and their clothes last too long. They got to make them cheaper.
Jeans last forever.
I know. I mean,
you gotta have planned. What is it called? Planned obsolescence.
Obsolescence. There you go.
Planned
That's
obsolescence,
a Vietnam
like your
War
TV.
term.
Like LG does it fantastically. I bought an LG TV, a 2-year warranty on the thing. It broke at 2.5 years. So I buy another TV. I didn't buy another LG after that, but and that was obviously maybe just I'm not saying LG's bad. I just had a bad experience with it, but I mean, things are break. I mean, those plasmas they were making years ago were planned to break after 7 years. I mean, I don't think the new LED TVs are like that. You can change the bulbs and stuff, but I mean, this is they make the stuff to break. So there's a point there, Joel. Those jeans last forever. Never have to buy another pair of jeans.
All right, let's go towards an extended ticker time here. You guys drop your tickers in the chat. Let's go ahead. Let's dive on in. What tickers are out there? I did see Amazon mentioned. Let's take a quick look at Amazon.
I'm long Amazon. I rebought my shares that I sold at, and everybody called me stupid when I sold at 3,200 and said you're never going to get the stock back. Well, I did. I got it back at 20. I don't know when the split thing, like 2,100, I think it would be. So $108 or whatever the heck that was.
Really? That was good. That was good time.
Yeah, I scalped myself a good 1,000 points on that from the Amazon. So anticipating the sell-off. Sell-off happened. I'm back in my Amazon position. I only got the half size, so I should rebuy the whole thing. I think on pullbacks, I think Amazon's put in a nice floor. I think there's so many stocks, growth stocks, tech stocks that have put in a nice floor. So the technicals are starting to look pretty good. The problem is we got a lot of fundamentals coming at us. and if Amazon comes out and warns, if the CPI data is hot, there's a lot of reasons we could go back down to the lows. But so far, so good. Amazon, nice bottom, right at $100, the old 2,000 level, which is the level you would think it would bottom at. This market trades logical, man. It's the best, except for a few pockets. This market, 2022, has been one of those most logical markets that I've seen in a long time.
Short-term target, just looking at 117.98. That was the high from last week. This was the split run up, split run down, came back up. Just what's the 50% here? I bet you it's right in this area. This is what you need to do. 101. I bet you this is going to be easy. Ooh, boy, this got the 129, 28-point move. 115, let's pop above 115 and build a little bit of a base, right? And then, build a base. Show me you people want to be buyers, consistent buyers like they were here at 100, 101, 102. Show me you want to be consistent buyer here. I think with Amazon too, I mean, their earnings just got so distorted because of COVID, right? And everyone was ordering everything, and it was just hard. I think their earnings they're going to smooth out a little bit. It's going to take a few years. They just had just crazy numbers because of COVID, and now it's just coming back to reality.
But online shopping's not going away. They're still your leader. They're going to remain your
Exactly.
leader, and they got the cloud. So
Cloud.
there's a lot
Yep.
of reasons to own Amazon. And by the way, Joe, you can't say you people. Nobody gets that. He doesn't get that joke. He said you people. Don Cherry fired for you people.
Really?
Canada. Yeah. He said you people. You can't say you people.
You can't say that no more, Joel.
No. Next.
Cat and DE, time to buy. It's an interesting one mentioned here. I saw Cat mentioned by some, DE mentioned by some, so why not touch them both? EXS wants to ask. Cat and DE, what do you guys think?
They've been beat up pretty good. They're oversold, deservingly so. Because if we go into a recession, big equipment is the first thing people aren't buying. It's big ticket items. I don't want to buy them because it's big ticket stuff. And if we do go into, troublesome times and building starts to slow and recession, these are not recession stocks. So if you think we're going to a recession, yikes. And that's, this is the recession trade. This is why they went down so hard. If you're asking yourself, why is Caterpillar and Deere getting killed? You're not listening to what is happening out here. Non-soft landing equaling recession, Deere, Cat, or sells. Now they've sold a lot. So is it priced in? I don't know. If we have a soft landing, there'll be absolute buys if we don't go into recession. But right now, it's still showing like we might go into recession, and big ticket items don't do well in recessionary environments.
We got some news on it today.
On Cat?
Yeah, I mean, it's up $5.
That's a good question. I think we probably do. That's a big move for Cat.
Yeah, I mean, it's.
I didn't check the headlines, but I'll go check right now.
I mean, compared to it's 6 times.
Yeah, gotta be something.
Yeah, so we'll find out later on or something, right? You popped this 179 for some unknown reason, so keep an eye on that. That's your pre-market high. Man, horrible relative strength. Made a new low for the move yesterday of all days. So exhibiting poor relative strength, potential double bottom there down at the 170 area. So I think that's really your risk. On the upside, I think things could get interesting if it busts above the 4-day high 182.14. But without knowing the news here, it just seems like it's up more than the market. And let's go with Deere, DE. Someone must have a note out somewhere. This is up $5 too.
Yeah, I think there's something too.
Somebody
said something.
There's news out there we don't know. I don't know. 94.80. I'd keep an eye on that. That's your 2-day high.
Yeah, I'm looking around to try to see if there's news out there that's getting this up.
The news is that we don't know the news.
That's what it is now. Let's keep going forward here. Let's take a look at. It's been a really good mover lately. So Roblox, RBLX.
This is the kind of stock that has turned. This is the kind of stock that I probably would be
ARKK favorite, right?
This is the kind of stock that bottomed in May. This is an ARKK favorite. You're absolutely right. Am I sticking in the long-term account? No, none of these stocks touch my long-term account. But as trades right now, they're a buy on dips. I mean, you get back down near the 35, you're probably going to find buyers here again. I mean, this stock has been hammered. I mean, what do you want from a short side? Stock goes from $140 to $20. I mean, that's the big meat. The big meat on the move on the short side has happened. Could Roblox eventually continue to go down and continue to slide? Could it go to zero? It could. I'm not going to say it can't, but right now the market has turned towards growthy names, and the sentiment is buy the dip on growth. RBLX fits that bill.
Dennis is referring to the lows are quite. 2 lows down at the 34 area. Doesn't look like you're going to see that today. Inside day yesterday, right? Someone's ganging up on this thing at 40. So keep an eye. 2-day high 40.35. Then they showed their real hand yesterday. They stuck the size out at 40. So there's you got room on the upside. I'd be cautious though, if this thing doesn't get away from here and doesn't get above 40, hold 40, and then make it support. So that's what I'm looking at. You got to get rid of that sneaky seller at 40 and on the cheap. Yeah, yesterday's low 37.41. If you get a look at that on a decline, I'd use that probably to cover short. I don't know if I'd want to use that to initiate a long term buy in the issue.
Keep us
Next
going
one
here,
up.
Mitch. Keep
Yeah,
us
let's
going.
go.
We're tickers. We have tickers coming. Everybody want to talk AMD. I'm taking over. AMD.
Go for it.
I'm still long AMD. Bag holding this sucker all the way down from $108, I think. So
Ooh.
still in it. I know that's an ugly one. It's in the retirement account. I guess I'm going to retire with it.
It's in the wife's account, dude.
$75. Yeah, there you go. $75.76. It's up. I would be a buyer of pullbacks on this. I think I might actually add eventually to my AMD. I don't know if the bottom's in on any of these stocks, but I think they've gotten
So hard to tell.
priced in
Yeah.
a lot of bad news. So I like the response to Micron. I think Micron, trading up after its disappointing report is a huge tell for the sector. Can AMD, is it going to get hit on its earnings? It might. Maybe you're going to wait on these. Maybe the thing is to wait till the earnings disappoint, the stock dips, and then maybe a strike. And maybe that's how I'm going to buy some stocks. Maybe I'm not going to chase my long term, but wait and start seeing. Are they buying these stocks and bouncing them back on disappointing earnings? I start seeing more of that. It's going to make me more interested. But again, it's hard to go all in ahead of the CPI data next week.
I don't know where to buy it or when to buy it, but next time Lisa Sue is on Kramer, that's when you sell it. When she comes out with some bullish comments on that. Pre-market high is 77. So we'll keep an eye on that. We're only 18 cents away from that. Looks like you could press it. And then maybe if you get a rip roaring market today, maybe get closer to 79. That's $2 away, 78.91. Coming back on the downside if I wanted to try and pick it up on a retreat. Yesterday's high, 76.28. Maybe get a little bit cheaper than that, maybe 76, and then lean on the double close area from Tuesday and Wednesday, 520 and 535.
I mean, everybody's nervous. Chat's nervous. Everybody's nervous about a lot of these stocks. And I've been nervous about a lot of these stocks for a long time. I just feel like at a certain point in time, you got to start dipping your toe back into the water. If you want to be in the markets, you want to make money, you can't just sit with 100% cash all the time and expect to, pay the bills. So at a certain point in time, you got to start nibbling your toe back in. I think there's a lot of tells that are saying it's not safe. It's never safe, especially in this environment. But I think there's a lot of tells that says there's still some money. There is some money now to be made buying the dip.
We just made a new high at 68.50. Nothing there for you, folks. 75. That was Wednesday's high, yesterday's high. So that's a short-term target on the upside. I'm not seeing anything on the dailies. There's really nothing in here as far as like a good level to lean on here. We got perhaps your 7-day close is closer to 3,900. Coming back down. I mean, I'd like to see the close again. That was at 38.48. Maybe you get some sellers coming in off the open. People are like, "Oh, I should have sold yesterday before it had that crazy move in the last 15 minutes." Might even have been less than that. But that's what we're looking at in the overall market. What else do we want to go?
They want to talk Marvell. I bought Marvell in the long-term portfolio 2 days ago. I bought it at 41.50. I'm already at 44.85. The reason again was it was bouncing down. I just looked at the long-term support at 40. So I caught the bottom this one. I had sold it higher. Obviously, I sold it a couple of times, and then I exited completely. And I've rebought the stock that I originally bought around $41 or $42. I've had some luck with this one before. I'm just timing right. So I've timed the purchase right. Now, again, am I going to stick around too long? It's going to warrant and gap down $10 on me. It's possible. But I didn't put it on for a trade. I put it on for a long-term investment. I've timed that one pretty good. We'll see what happens. It's 44.85. My price target on this, eventually would be 60 again. I don't know if it's going to get there anytime soon, though.
Yeah, well, first, for me, I'm just looking really short-term here. And, someone's lurking there at 45. They were lurking there a couple days ago, 45.02. things kind of open up if you can clear 45. I don't know why it's trading. Once again, it's trading up more on a percentage basis than the market. People are feeling good about tech stocks, but
chips are up big today.
Chips are up. Yep,
chips are up big today. Taiwan Semiconductors up 4%. A little bit of a driver here today too. And the chips are all up pretty big this morning. Chips are having a really good morning.
Yeah. Just be careful if you do blast through 45 on this one, and then you come back down. Then maybe if you want to pick it up on the cheap, Marvell. What's the close? Maybe look at the closing price, but wide open over 45. We'll see if you can get above it and hold. The close is down at 43.82. I don't know if you're going to see that today.
Samsung's earnings came in line, so that might be why you're seeing also the semiconductors up. Is Samsung numbers coming in line after warning from Micron, better than expected there in their earnings. I did see Cleveland Cliff that has been falling off a cliff mentioned in the chat. So let's see if it hit the bottom. Did it hit the floor?
Oh boy!
Really oversold. Really oversold. Yeah. With that being said, we just gave the recession talk. This is a recession stock as well. And we've seen the way steel has been killed. If I was buying a steel stock, I'd stick with Kramer. I'd stick with Nucor. I still own a piece of my Nucor. I sold 2/3 of the position up at 170. I wish I would have sold the whole damn thing.
Wow. You looked bad for about a day on that one.
I looked bad for a day because the next day went to 185. I was like, oh, that sucks. And then it collapsed. So it was a day early. I'm usually early, man. That's me. That's my problem. 22 years of trading.
I mentioned it yesterday. You remember, Dennis? I mentioned it.
What was that?
That you're about usually 2 to 3 weeks early.
Yeah, on swing trades, I'm a couple weeks early. The investing, I'm sometimes a couple of years early. And the day trading, I'm usually an hour or two early. So I'm usually early. But I usually, for the most part, I've had some success.
I'll tell you one thing.
I'm usually early.
I'd rather be early than late because late is
bad. Also. You're exactly right. You don't want to be late. I'm buying and going all in on commodities. I'm buying my ExxonMobil at $100 because this commodity trade. I got grandma coming into the bank, and my son-in-law says silver is going to go up forever. I'm going to buy all my SLV at 47. That's late.
There's an institutional buyers under 15, right? 1, 2, 3, 4, 5 lows in that area. So there's your support. There's what you're leaning on. Up 54 cents. Clear. I mean, if you could show a bid above 16, you got some things open up from 16 to 17. But once again, I mean, the market has come off the low. And this thing is just kind of blah. So, the only thing you can do is lean on the low of the move or that whole 15 area. That's where the big boys have been stepping up. If it's just buying it at 14.5 and flipping it out at 16 and moving on, that could be the trade. But CLF trading up nicely this morning.
I want to say Bitcoin. If you and I am starting to get a little bit ARKK bullish, Bitcoin fits that category. We have not really seen much of a rally in Bitcoin here yet, hanging around 20,000, but trying to hold that level. So far, so good.
Yeah.
I just say, like, at this moment in time, if I was short any type of Bitcoin instrument, I would be covering. So I'm not saying Bitcoin's going to rip, and it's, I'm sticking in the long-term account. But I think the time to be short any crypto stuff is past us for now. Not saying long term, I still, I'm skeptical of everything crypto. But we've sold off significantly. They're talking about the crypto winter on CNBC. The crypto winter on CNBC has already happened. I mean, Bitcoin went from 30,000 to 20,000. It felt like in a week. It's oversold.
Also at least I think it still has room to come down because of what's been going on in the environment, though, with all the platforms, right?
That's all scary stuff. But I think
who's going to go into buying into a platform right now?
I'm not buying in any of that stuff. I'm just talking just Bitcoin, not fund coins,
but Bitcoin is in all these, right?
Voyagers or any other probe we're sending to Mars or wherever. I'm not talking any of that stuff. I'm talking just Bitcoin. Bitcoin has sold off substantially, 60,000 to 20,000. I'm not saying this is the time to stick it in your long-term account. I'm just saying if you've been short or if you've been bearish crypto, I think there's a relief rally in store here in Bitcoin. Just my opinion.
Well, you're on Kramer's opinion. Kramer jumped on that yesterday. I just want to let
Did
you
he
know
say?
that.
Did he go bullish?
Yeah, a little bit. Yeah, he
Oh
did.
gosh, now I want to take everything back.
Yeah, that's why I was scared. I was like, yeah, I'm not jumping on that train. You and Kramer could be on that one. I'll be
We're
on
the
the
same
other
team.
opposite
Sometimes
side.
I'm on the same team, and sometimes I'm on the same opinion of Kramer.
Hey,
I don't know. It usually doesn't work out when me and Kramer are on the same side, though. So be cautious then.
we'll see what happens. I did want to let you guys know, Joel, it looks like pre-market prep plus will be out today and tomorrow.
Yep, back on
confirm
Monday.
that.
But everyone, let's keep an eye on yesterday's high, 75. That'd be a
Okay.
target. And then someone asked for a short-term target in Apple. And boom, what we have going on. Let's just see the pre-market high today is, oh, a wrong chart. Sorry, I should have had this pulled up first. Now it's sub's going on at 143.5, but see if you can get a look at yesterday's high, 144.12. Established a lot of highs in this area. Keep an eye on 144. Everyone, have a good day.
All right, we'll have a good day. Have a great one, Joel. Kill it like always. And Dennis, go get it. We'll see if buy the dip is back. We'll see if we can continue this rally.
Big number tomorrow. So we're gonna get some, a big number again tomorrow there, but the big number still Wednesday.
We'll have that. Wednesday. CPI will be coming out. Of course, that will be on everyone's radar today. Don't miss it, guys. 1 p.m. Eastern. Bullard will be speaking. We'll see what happens there. Does the market get Bullard? We'll talk about that, of course, coming on up on multiple shows, either stock market movers. But that will be going on right when he's speaking. So that's going to be interesting to watch the tape then. I'll see you guys on live trading. Lord Ryan and Zunaid are back. So definitely smash the thumbs on up. Come on over to live trading. Let's see if we're able to get into the green today. What do you guys think out there? Hit the like.